So at the bottom, you can do it through basic asset allocation. If you've heard like the 60-40 portfolio, 70-30 portfolio, or own your number of bonds in at your age, that's kind of the basics. That's like step one. Equity selection is now getting within the portfolio and picking specific securities that are more or less volatile than others. So that's kind of the inside baseball sort of thing. And then the active strategies, most people don't use those at all. That's fine. We do use some of these. There are special strategies that we use to manage the volatility that happens automatically, which we kind of like because it takes the judgment out of it. So we'll talk to those. There's outright hedging. So if you've heard of the analogy of your portfolio, for some people is their largest asset in their life. So if you insure your house and your car and your life, why would you not insure your million or multi-million dollar portfolio? Then that is a good question. There is a mechanism to do that. However, it is a little expensive buying the puts to do that. And the last one is kind of, if you don't do any of the others and you find yourself in a market sell-off, you can just panic, and you can panic sell. And I will say that it's not always wrong. You want to use the strategies on the other part of the slide to avoid having to panic. But if you hit the point where you are panicking, there are some times to sell, and we'll talk about that briefly.